So yesterday we got NFP. Let's see what we had there. So this is the NFP candle right there. It's kind of odd looking day, and I didn't like today's NFP. But yeah, basically coming to the day, you can see first of all NFP price action the whole week. Monday we have trending environment. Tuesday we got trending environment. Then the Tuesday's range is the one in which we trade the rest of the week, and even NFP doesn't really break out of that range. So that's something interesting. Also Tuesday, this drop is the drop that was caused by the news that Iran is bombing and sending missiles to Israel or some shit. So that's kind of a reaction to something that was happening in terms of war. But then looking at the daily chart, NFP actually doesn't break out of the Tuesday's range. So inside range day, we break previous day high here, but we're still inside range. And then this NFP trades higher. What I was expecting is that before NFP, the Friday will trade higher, and then when NFP opens, we have a little manipulation, and then we wank lower. Obviously, it didn't happen, but it would have been a very reasonable thing to expect after all this liquidity. Like, this is something that needs to get swept. I'm sure that will happen. But I don't actually know. Now that what we're seeing here, it looks more and more probable that we will run like these highs at first, and maybe we could just go higher and never really refer back to this point. Sometimes NQ can do that. So yeah, let's see what we had there in Friday's price action. So how I like to trade this is that first of all I mark out New York midnight open, which is here. That's the midnight open. We basically manipulate lower, don't really trade far past. Like, if you want to utilize midnight open, you want to see a little bit further down, maybe market referring back to the midnight open down here. Anyhow, but yeah, if NFP had wicked heavily here, I would have been more bearish here. But because the body candle closes here, when we trade back down, I'm not necessarily expecting market to have a massive move down now. But yeah, midnight open there. 8:30 open. Let's just have that like so. And 9:30 open. You can see we are bullish. 9:30 open. Market manipulates lower after that market open there, and then runs higher after that. So it uses this as a power of three idea where you open, low, high, and close. But yeah, I'm also going to see about the regular trading hours gap because wait, did I mark that wrong? Yeah, that's not 9:30. That's 9:45. So the 9:30 open is actually up here. Sorry about that. But anyhow, regular trading hours. You can see how massive that new range opening gap is. There's only that 50% level there, but we can have it like that. So when we gap so high, it's kind of expected for market to kind of retrace a little bit at least. Then we slowly break above the equilibrium. Then we respect the equilibrium there and start to leave the new range opening gap. And then the market goes there. But yeah, overall this is kind of an odd day. I live in a time zone where it's very convenient for me to trade London session. Now I don't trade that so often because you know NQ is not necessarily the best in London session in my experience. But London session price action. You can even see from here. London session was from 3 to 4 a.m. There's the silver bullet session that I would only trade, and I was observing this live time, so you can see even 15 minutes. It's kind of easy to see that this is sell side of the curve, and this is buy side of the curve. So but this is NFP Friday, so you kind of don't want to hold all the way up here. You can see how we hit the internal target here, then kind of chop down, have massive down candles, don't really sweep that low, and then run. But yeah, we didn't really, I didn't really see a place to execute here because we didn't get the retracement towards the 1 minute fair value gap that I wanted to see. But yeah, I was basically trying to execute inside or in close proximity of this area. When you see this holding, you are bullish anyway. You're seeing 1 minute market maker buy model. Things are looking quite good. Ideal scenario, this candle isn't so big. We kind of close above this high, then wick down here, and I take long here. And I would have executed long around this region to go long. And I would have taken this type of trade, but it never really came back down. But I was super happy about my price action tape reading in this session. But yeah, that's what London gave me. The next setup would have happened really here. But obviously, that's kind of a weird time. I wouldn't want to take that. But that's really the move that causes the explosion higher towards the real external draw. And then NFP candle. We got some relative equal lows here. All of that liquidity that we have been building the whole week. And NFP just moves higher. It's not even that crazy looking candle. It's not that nice, but it's something. Then we trade lower, continue higher, consolidate a little bit, shift in structure here. 9:30 opens. 9:30 opening candle isn't that clean looking or nothing special. Like it's super ugly. No. This price action you don't really want to trade. So 9:30. This consequent encroachment of that wick here. Look how the bodies respect that. At this point I would be short-term bearish because all of the buy side that has been swept. But after 9:30 open we see it chop like this. I'm not going to get short. The first opportunity to get short is here. I guess this is valid, but again I would advise not to take it because of the day and the context. And trade lower. And as I said to you, I'm not really bearish, even though we get that bear candle because we are in a bullish range, and because of the body candle the candle's body close up here. If we didn't close up here actually, and we created like this huge wick, I could be actually selling here. But looking at these bodies, there's no way I'm going short anywhere in here. And so what I'm thinking at this point is market wants to rebalance a little bit. We don't actually need this right now, but we got like a bullish order block, which we are respecting. And once market comes down, well, first of all, could you sell up here? Yeah, you could, but when my high time frame bias is kind of mixed, I would not take this. If I took this, I would take a super small risk size. Especially when you see the body candle closing up here. I'm not expecting market to target the external draw here. It would be still fine to expect market to run some of these equal lows down here. So if you actually want to take a sell, I guess that's fine. But the setup in here that we get, there's a fair value gap here. It's just not that clean. It does happen in 9. Looking at this now, it's starting to look even better and better because it's 950 1010 macro that this actually delivers. So these kind of things make me think that maybe this is even a better setup than it actually seemed like at first. But yeah. So you break structure to the downside. You have short-term possible bearish bias. You got macro. Maybe that's not that bad setup. But then you trade below that liquidity. At that point, what I'm kind of thinking is we close 15-minute fair value gap up here and 30-minute fair value gap. And even if we are moving lower, I would want to see price rebalance this price range, minimum equilibrium, which is here. And you know, we are late in the session at this point, coming towards 11 a.m. and you're not expecting market to really move down at this point in time when it's Friday and stuff. So you would really only expect some type of chopping to the upside. Maybe you could see a little bit choppiness to the downside, but like nothing massive. So what would you do here? Well, The 30-minute gap closes here. If you truly wanted to be long here, yeah, you could do that, but I would want to see this getting swept once more because we come so close towards the low here. And then the breakout structure happens first time in here, which obviously works as a long. But no, I don't like that shit. How about short then? Well, if you were actually bearish here, now we have balanced equilibrium, taken fair value gap here. You could technically get short here. If you take your profits aggressively, you could have won this setup. Not my setup. But yeah, let's see that's what happened in the AM session. Let's see what was going on in the PM session. Market closes around 4 p.m. there. You know, something that I've realized is that sometimes the PM session, silver bullet and stuff like that, after lunch we kind of consolidate, and then the last hour of trading we actually start trending to a certain direction. Now the trending really started happening in here, but the 3 to 4 p.m. time frame is really the time slot where we broke out of this range and started running a little bit higher. But yeah, anyhow. So nothing in here is tradable, really. We kind of go all over the place. I wouldn't really touch this and then the last hour of trading. So something interesting is happening here because we have the high here. We displaced through the high with a fair value gap. So basically executing long from this, having your stop below that order block could be fine in like looking at this, but I'm not really sure what you would target, because maybe like this high, like yeah, you can target this high, but I'm not expecting us to break the high again so close to the market close. And we're kind of having a situation here where you can expect some type of consolidation to happen inside this area. So some setups you can find here, and I guess it's fine to try take some of these, but I would just avoid it, all of this price action. I will show you quickly one ICT like entry model that I learned a small time ago. So basically it works like this. You got some buy side there. Let's do it like that. This is your high time frame draw. That's also your daily bias. This is the lunch hour low. And the basic premise is that you displace through a high, creating fair value gap within the previous high here. So in same area there's a fair value gap like that, and all of this is happening in the PM session. So let's say this is the 1 p.m. to 4 p.m. So then if we displace through the previous high, we take out that high, and we are yet to trade to our external high time frame draw. In that case, if you have a fair value gap in the same area with that high, you can actually execute along there. towards your external draw. Like that. So it's basically, if I'm expecting bullish and expecting price to reach to the specific level, and we have taken out a high and we have yet to trade to our higher time frame objective, and we are past the lunch hour, I will look for a fair value gap right at the old high and go long there. Then after price has met the high time frame objective, we can expect to see a reversal. If the market reverses and breaks the BC you use to go long, you want to use the very next selling opportunity, basically selling that inverse fair value gap. So that's what I wrote in my journal. So basically in here, this would be an opportunity to go long towards the higher time frame draw. Now we are close to market close, and we have lunch hour low, some liquidity. If you see market reversing, you don't really have to see a break of structure to the downside, even though this would be counted as one. You just want to see the bullish fair value gap broken. Now it's become inversion. When it inverses, you don't just enter like that and target the lunch hour low. You would actually wait for market to tap into that inversion again. In which case, let me draw that a little bit nicer. So you run that, then you get the inverse to fair value gap, and then you target the low. So the inversion would be, let's say that, and you could execute from that inversion like that and go short.